Hello everyone, welcome to Forex site, an Autobot designed to exploit Forex market inefficiencies. The foreign exchange or Forex market is a global powerhouse with over $6 trillion traded daily. It operates around the clock, making it impossible for a human to monitor effectively. This presents two fundamental challenges. First, the need for constant, vigilant analysis, and second, the battle against human emotional biases, like fear and greed, that often lead to poor trading decisions. Our project, Forex Site, aims to solve these problems through intelligent automation. While automated trading isn't a new concept, existing solutions have significant limitations. Most are based on static, rule-based algorithms that fail to adapt to changing market dynamics. They operate within a very limited action space, often restricted to trading a single currency pair with a fixed capital allocation. We saw a clear opportunity to develop a more sophisticated system, one that could learn, adapt, and manage a dynamic portfolio of multiple currencies simultaneously. This brings us to a core innovation of our project, multi-currency trading. Instead of being confined to a single pair like euro versus the US dollar, our Autobot views the market as an interconnected portfolio. It can dynamically trade between all selected currencies, such as the dollar, euro, and British pound. This approach relaxes the rigid constraints of traditional bots, allowing the agent to continuously reinvest capital into the most promising assets at any given moment, thereby unlocking a much higher potential for profit. So how did we build an agent capable of such complex decision-making? Our methodology is centered around deep reinforcement learning, or DRL. Instead of just predicting price movements, a DRL agent learns a complete trading strategy, an optimal policy, by interacting with a simulated market environment and learning from trial and error. The first step in building our DRL agent was to define its perception of the market. This is called the state representation. Our agent sees the market through three critical pieces of information at every step. First, the last 30 price ticks, which give it a short-term memory of market momentum. Second, its current portfolio values, so it knows what assets it holds. And third, a set of key technical indicators like RSI and MACD, which provide a summarized mathematical view of market conditions. This rich state representation allows the agent to make well-informed decisions. However, while data is noisy, to help our agent identify meaningful patterns, we implemented an LSTM-based feature extractor. An LSTM, or long short-term memory network, is specifically designed to understand sequential data. It processes the historical price ticks and extracts a compact, feature-rich vector that captures underlying temporal patterns and trends. This feature vector, not the raw data, is what the agent's policy network uses to decide on an action, leading to much more robust decision-making. The heart of any reinforcement learning system is its reward function. This is the signal that teaches the agent what is good and bad. We experimented with two distinct reward schemes. The first is the effective portfolio difference, or EPD. This is a straightforward, profit-driven function. It rewards the agent based on the net change in its total portfolio value at each step, after accounting for transaction costs. Its goal is simple: maximize raw profit. Our second, more novel approach is the amortized value difference. We designed this to create a more risk-aware agent. Instead of rewarding any increase in value, AVD specifically rewards the agent only when it sells an asset for a profit. This encourages the agent to lock in gains and avoid holding on to losing assets indefinitely. It's designed to learn a smarter, more conservative strategy that prioritizes realized profits over unrealized paper gains. Now for the results. This chart shows the equity progression of our two agents, EPD and AVD, compared against a common MACD-based baseline strategy during backtesting. As you can see, both of our DRL agents significantly outperform the baseline. The blue AVD agent in particular demonstrates a strong, steady upward trend, indicating consistent profitability. Let's break that down with some key financial metrics. The Sharpe and Sortino ratios are crucial as they measure risk-adjusted return, essentially how much profit is generated for the amount of risk taken. Here, our AVD agent achieved a Sortino ratio of 0.53, almost 3 times higher than the baseline. This proves it's not just more profitable, but significantly smarter about managing risk. Furthermore, its maximum drawdown, the largest peak-to-trough drop, was nearly identical to the safe baseline, showcasing its ability to generate higher returns without taking on excessive risk. A successful simulation is one thing, but real-world application is the ultimate test. We integrated our trained agent directly with MetaTrader 5, the industry-standard platform for Forex trading. Using the official MT5 Python library, our system can programmatically monitor live market data, analyze it with our trained policy, and execute trades, placing, modifying, and closing orders, all completely autonomously. What you're seeing now is our main Python script. I'm about to execute it. As it starts, the program will initialize the environment, load the pre-trained agent's policy, and establish a connection to the MetaTrader 5 terminal via its API. The connection is now live. The agent is receiving real-time price ticks from the server. You can see how all the trades are being displayed on your MetaTrader account. All you have to do is let the bot take care of your trades and relax. This is how Forex site works. Hope you got an idea of what happens under the hood. Thank you.